I sadly don't think that we'll get to that point where gold backs a currency anymore, because you said it, it takes the power out of the politicians' hands, and they're going to hang on to that power as long as they can. And I'm really afraid they'll blow up the dollar and the financial system in the process. It's not a happy thought, but it's a realistic one, I think.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, gold looked like it was going to break out and stay over that 2,000 range forever. It would be a distant glimmer in the times when it was below 2,000. But here we are, and it's retraced a bit. We're under 2,000, but we got a special guest for you today, and his name is Dana Samuelson, founder, president of American Gold Exchange, a company I once bought some gold from a long time ago. Dana, it's great to have you on the show. So what is going on with gold now? When do you think it'll resume its upward journey, or will it?
Hi, Kerry. Well, thanks for having me. It's great to be here. I appreciate your being a previous customer of ours. So gold is consolidating right now around the $2,000 mark. Last year we had a pretty whipsawed year because the dollar was abnormally strong due to an interest rate differential here in the U.S. compared to the other major economies of the world. The Fed raised rates harder and faster than they ever have before, and interest rates here were higher than in Japan, the Eurozone, Great Britain, which made the dollar become very strong for a period of time and pushed gold down to a cyclical low of 1635. Now we've seen a big correction back up, especially after the bank failures, Silicon Valley Bank, where gold punched up to previous all-time high of $2,080 an ounce about a month ago. And the key to the gold market now, in my opinion, is the value of the dollar relative to other currencies. And on the dollar index, which is now at about 103, the dollar is looking a little bit better than it has in the last 2 months, where it channeled at a bottom of 101.5. Gold tends to trade inversely to the dollar. So when the dollar is strong, like it was last year at a peak of 114 on the dollar index, that's when gold bottomed at 1633. Today, the dollar's at 103. I do think we're going in towards an economic slowdown, if not a full-blown recession. It looks like we're on the cusp of that, which would weaken the dollar. That'll help to buoy gold higher because, as I said, gold trades inversely to the dollar. More importantly, we've got bond yields are near cyclical highs right now. At 10-year Treasury yield about 3.5%. Remember, that was about 1% 2 years ago. And gold does not do well typically when yields are high because gold doesn't pay a dividend. Well, if the Fed is forced to pause, which they will, probably they may be done raising the federal funds rate now. We'll see how inflation goes. But gold has responded to the anticipation of a pause, and that's part of the reason that's buoyed up to around $2,000 an ounce and held that floor for quite a while now, 2 months.
Mm-hmm.
When yields come down, that will really open the door to higher gold price. And I think that we're looking at that later in the year, either as the Fed decides to cut interest rates or the economy slows down. Either way, I think yields will ease, if not fall further from the heights that they're at now, and that will buoy the gold price. So I think gold has upside potential of 10 to 15% in this environment. That's a pretty easy gain, barring any other, unusual for circumstances in the economy, like another big bank failure. It looks like most of the banking issues have been pushed through the system, although some systemic risk still exists, I believe.
Yeah, so what of the bank failures and all that? You think it's really behind us, or has it just left the headlines for a while?
Well, it's hard to say. The first 2 weeks following the Silicon Valley Bank failure, we saw a huge exodus of excess cash reserves in banks move primarily into the U.S. Treasury market. And that was a crisis of confidence in the banking system. If that rate of deposit departure had continued, it would have severely challenged the banking system. So confidence was restored because the Fed backstopped the depositors over $250,000, all of them. They put another $300 billion back into the system that they were trying to take out to help liquefy things. So confidence is back, but that doesn't ease the fact that there are a lot of treasuries and securities that are held by banks that are upside down right now because the yield has jumped so much. And we haven't seen a rate increase from the Fed and yields rise like this at this rate since the last inflationary cycle. Now, I got a little snow on top of the mountain over here, so I remember the last inflationary cycle. And today, you've got money managers, bankers that are in their 30s, that are in their 40s, even in their 50s, that don't know how to manage risk in a rate environment change like we've seen. And that's exactly what happened at Silicon Valley Bank. They didn't manage their risk properly. Specifically duration and yield risk. So there are still problems in the system. An easing of the rates will help to mitigate some of the losses that are on paper. It all comes down to whether they have to actually take the losses that they have on paper or whether they can trade themselves out of their losses over time. We'll see. But another shoe could still drop. It just, will it? Maybe. It's hard to say.
Well, it's not just the United States banks that are on the balls of their feet, so to speak. China, their banking industry has been insolvent longer than the U.S.'s has. And Europe, with the bailout of Deutsche Bank and Credit Suisse forced acquisition, all these things show a banking system that's kind of on its way out, perhaps.
Well, there's no doubt that there's a lot of fundamental problems with our overall financial system. Too much debt. We've just increased the debt load dramatically over the last 15 years from the great financial crisis and then COVID. Now inflation is here, and it's probably much more entrenched than most people realize. I have a hard time believing that we'll get the baseline rent down to less than 3%, and probably less than 4% may be difficult for the Fed to achieve unless we go through a real strong economic slowdown and the demand just, really dramatically falls. If you look at it in the big picture, between 1795 and 1995, the U.S. accumulated $5 trillion in debt. And in the last 28 years, we've multiplied that sixfold. And that is just an astronomical rate of increase that just cannot be sustained.
Yeah, the whole system's unsustainable the way it is now. How bad do you think the recession's going to be here, Dana? That's inevitable recession.
Well, as I mentioned, I'm kind of an armchair macroeconomist. It's really hard to say. The jobs market remains strong, but jobs are the last thing to go. We've already seen the housing market dramatically impacted by higher interest rates. Manufacturing is usually the second leg to go to weaken, where orders fall off, and then profits fall, and then employment falls. I think they call that the hope cycle. Housing, orders, profits, employment. Right now, we're somewhere between orders and profits, and it just depends on how weak how much resistance the economy really gets from these higher interest rates. One thing we are seeing is bank lending is slowing down dramatically. And that's going to help the Fed attain their goal of slowing the economy down without potentially raising rates further. But bank lending is the key to small business and medium-sized business, and that's half of the economy. And, I saw, what's his name on Shark Tank? Kevin O'Leary, is that his name?
That's him.
Yeah. Do an interview a couple weeks ago, and he said, businesses that can typically borrow against 90 days of receivables at 7 or 8% are now paying 25 and 30% interest to get that same 90-day receivable cash flow back from lenders. And that's a killer for small businesses who can't, wait that long between paying for their goods and being paid for their products or services, materials rather, and then products and services. So
that's a killer. Sure.
It's hard to say in my opinion, but I think if you look at the yield inversion curve, which is steep, and it's been steep for 9 months now, that signals one of the biggest recessions we've had since the 80s. Now, whether that materializes or not, it all boils down to consumer spending, which is, of course, 70% of our economy.
Yeah, so we have this recession, and then the Fed cuts rates, and but economic activity's down, deficit goes even higher than it is now to 2-3 trillion a year. Where does that leave us? It's just the debt. We have a debt problem, and we keep compounding it by creating more debt. Isn't that the solution that our leaders are constantly putting forth?
Right. That's what we've been doing for 15, 20 years now. And we're nearing the end game because the interest that we're going to pay on our debt now is going to be the highest line item on the U.S. budget at over $1 trillion a year. Now, 2 years ago, our interest on our debt was $500 billion, 500 billion. So we're getting into the point of time where GDP, it'll take all our GDP just to pay the interest on our debt at some point in time. And that's when, things really fail.
That's when the fun really starts. So, all right. At that point, I guess you could expect to see gold go far higher than it is now.
Yeah, it's the currency of last resort and the world's oldest and safest trusted form of money. Yeah, gold is an international asset. It has no counterparty risk. It's immediately liquid anywhere. It's immediately valued all over the world instantly. Gold will be a great hedge to have in an event where the dollar just continues to lose purchasing power if it doesn't blow up altogether, which will eventually happen if we don't change the course that we're on. And politicians just don't have the resolve to fix the problems that we have.
Yeah, and isn't that the truth? And it's not just the U.S. fiat currency they'll all go up in smoke together, won't they?
Yeah, I believe that. The dollar is the king. It's, there's been a lot of talk of de-dollarization. And I think that that's a process that has started in earnest. It'll take quite a while for that to manifest fully, probably 10, 20 years, to be honest, unless I'm wrong. But I don't think the system can stay intact that long the way we're going now with debt and the continuing loss of purchasing power, dilution of value of the currency as we print more and more of it and increase our debt. I mean, global debt was 150% of global GDP in 2010, and now it's 250%. It's a worldwide problem, and it will blow up fiat currencies.
Hey, so one final question for you. The future of backing currencies with precious metals. It's the last thing the politicians ever want to do because that will take away their power. Is it inevitable, or will they keep fighting it to the very end?
Well, I would love to see that. That would put the gold price in anywhere between $10,000 and $15,000 an ounce and higher if it were to fully back the dollar or other currencies. I think we might see a partial backing of something like the Chinese yuan. I sadly don't think that we'll get to that point where gold backs a currency anymore, because you said it takes the power out of the politicians' hands, and they're going to hang on to that power as long as they can. And I'm really afraid they'll blow up the dollar and the financial system in the process. It's not a happy thought, but it's a realistic one, I think.
Yeah, I would just add to what you said. The politicians will absolutely fight it to the very end until they have absolutely no choice. There's no other option because look, any fiat system relies upon confidence, and I always say the root of the word confidence is con, right? So once the con is over, that's the end of the confidence, right?
Yeah, exactly, and we are headed that way. And in a fractional banking system, I mean, it's been exposed with these bank failures that we've had. How thin the system really is, and the pressures from the debt and these higher interest rates are just revealing the fragility of the system. And we cannot just continue to add another $5-10 trillion to our debt without creating some other unintended consequences, one of which will be the end of the dollar's purchasing power at all.
So true. Hey, once upon a time, the reserve requirement at these banks, the amount of reserves they had to keep on hand or depositors was 10-12%. Now they've done away with that since the last financial crisis. There is no reserve requirement, which means infinite hyper leverage, hypothecation, all that good stuff. Dana, just tell us, where do we find you? How do we connect with you, find your work?
Well, my company is American Gold Exchange. We're located in Austin, Texas. We're a national physical precious metals and vintage U.S. gold coin dealership. Our website is www.amergold.com, amergold.com. Our general email address is info@amergold.com. And if you want to take a look at our website, we have live, transparent pricing. We're very competitive, have an impeccable reputation in the national market for 40 years. So we'd love to try and help people if they're interested in physical precious metals. That's what we do.
All right. Hey, we appreciate you coming on. If you got a question for Dana and myself, email address is kl@kerrylutz.com. You'll find a link to Amerigold in the show notes to this interview on financialsurvivalnetwork.com. Just click through. While you're there, sign up for your free newsletter. Dana, been a real pleasure. We'll have you on again. Thanks so much.
Thank you, Kerry. It's been a pleasure speaking with you today. Best wishes.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.